Hello and welcome to Last Week in Finance. Today is September 6th of 2020. We're going to start with the S&P 500. Went down this week. Went down 2.31% and more on that later. Gold also went down 1.6%. Right now the ounce of gold is in $1,933. Silver went down as well, a little bit over 2%. Right now, the ounce of silver is $18, a little bit more than that. The DXY, the US dollar index, slightly up 0.25%. Bitcoin actually is going down. The last measure that I had is a little bit over $10,000 per Bitcoin. And let's start with the news of the week. Well, at least for me, the new unemployment data by the Labor Department. It's now actually is better than expected. The U3 unemployment rate, the one the government and the president likes to brag so much, is right now in 8.4%. 1.4 million new jobs were added to the economy, and seems like the rebound of unemployment is taking place. I mean, that's good news, but take it with a grain of salt. I mean, most of these jobs were furloughed, and right now they're calling back those employers. Still, the jobless claims are still going on in the economy, so keep your eyes open of that. But true story is that I don't like I don't believe that much that U3 unemployment rate that the government likes to publicize that much. I use the U6 unemployment rate, which is the real unemployment in the economy, and at least the most accurate measure. And the U6 right now is in 14.2%. Remember, the U6 is the most accurate unemployment rate, which accounts the people who are looking for a job since around 15 weeks, and also takes into account the people who has low paying jobs and are looking for a better job. That measurement is right now at 14.2%. Repeat, 14.2%. I mean, it's higher. So don't, it's nothing that bragging to be bragging about. The president, I know they likes to brag about of these things even when they're not true, but take that in account. Okay, the topic of this week: what will be the future of stock market? And right now, the short term, medium term is not good. Let's be honest. The the stock market right now is in a bubble. Apple reached this week 2 trillion market cap and went down 8% in a day. It was Thursday, I believe. Thursday, the S&P 500 went down almost 4% at some point. Friday closed around another negative 1% as well. And the the best question right now is, that was a contraction or the reality is coming for the S&P 500 and the stock market in general? I'll say it's a toss up. It's a coin toss. I don't know if it is the beginning of the reality adjustment, as I call it. I mean, the stock market is gonna go down, reflecting the reality of the economy, which is not good. And that's not all, not just, it's not because of COVID. I mean, we're having these artificially low interest rates. The Fed is printing money. We are in practice. We have a almost stagnated economy. It's a lot of fear. We don't know what's gonna happen. Good quality jobs are not being added to the economy right now, and possibly real estate collapse will continue. And why is that? Remember the last great financial crisis in 2008 was due to the mortgage-backed securities, the stock market crash, and then take the rest of the economy with it. Right now, it's gonna be backwards. The rest of the stock market is overpriced, over leveraged, a lot of debt, a lot of overvaluation of the companies, the PE ratios, you just throw it out of the window and buy high and sell higher. And that's not healthy, that's not good, that's not reflecting what is happening to the economy. And in this case, in this new recession there and depression there we're going to have now in the future, in the near future, that thing is going to take down the real estate market as well. And why I'm saying that? Because, of course, many people are with have their mortgage, and unlike the previous recession, right now, people with mortgages are people that they have relative good income. They get the properties, they pay their mortgage on time in a normal scenario. This is not a normal scenario. Many people will lose their jobs, good paying jobs, and they will not be able to afford that mortgage. And they can no longer also use their house as equity because the real estate is gonna crash. So it's backwards, like unlike the last recession. Okay, what I think is gonna happen eventually, I predicted a 40-50% crash of the S&P 500. This is the beginning. I don't know. It may be a correction, and that 50% crash will happen next year, 2022 tops. I don't I don't think it's gonna get to 2022. It will start way sooner. But the only question that I have right now, if this crash, that this contraction that started on Thursday, it will be the beginning. I'll say it's a 50-50. I don't know. And actually, I hope the stock market crash, and not because I want bad things to happen. I mean, it's not healthy. It's good to start over fresh with real data, with a real estimation of the what the economy is doing. Remember, the GDP contracted almost a third in the second quarter of this year. So let's. I just want it to be real. I mean, remember, historically, the stock market goes up because companies are doing good things, and I mean they're still doing good things. But right now, this bullish stock market is not because companies are doing well. It's because the Fed is printing money, and hence they're using this money to buy stocks. Companies in this bull market, previous COVID, they use their earnings instead of saving, for a rainy day. They do the buybacks. They bought their own stock in order to artificially sending up the valuations and the market cap of their own company. So that's not good. For instance, the airlines. The airlines in this bullish market were doing good. American, United, Delta, you name it. What they do? Remember the airline business is they has it has a lot of expenses, and the market, the earning, the yield, the revenue, the net revenue is really low compared of the gross earnings. And of course, so at any given moment, something bad can happen. I'm talking just airlines. And instead of having savings, in order to address these issues, they went and bought their own stocks. So they have no savings. And right now, when things are going bad, I mean, of course, the pandemic is not airlines' fault, but many things could happen in this business, and that's why you need to have savings in order to address these issues, and they didn't. And right now, things are bad. They laid off a lot of people, a lot of their workers, tens of thousands of workers, despite that the US give them a bailout. So that's why we can't keep anymore this economy where things are good. We're gonna be, don't care about these things, and when things are bad, just wait for the government to bail them out. This is not it's not healthy for the economy. It's not healthy for the average people. So I support that just a stock market crash and then start over again, doing things well this time. Well, that will be all for this week. I hope you enjoyed the show, and I will come back next week with another episode. Thank you and bye bye. Take care.